All right. Welcome to today's stock market update. Negative GDP again. Is this a recession? Stocks are hot. NASDAQ had its best day since April 2020 this week. Recession, no recession. What is the question? What is the answer? We'll look at GDP, what it means. Back-to-back wins after the Fed statement. What's next? We also have Amazon, Apple reporting strong earnings and much more. In this update, we'll review what you need to know and what's in store for us next week. But before we get started, today is Friday. And if this is your first time here, my name is Mark Hodge. I'm head coach at Rockwell Trading. And on a typical morning, Rockwell Trading's founder, Markus Heitkoetter, is with me. And with watchful eyes and almost 50 years of trading experience, we sift through a mountain of news websites, newsletters, and reports. And then we take the most important news and go live right here to share with you what you need to know as you head into your trading day. We will have a slightly different schedule this month, and maybe things are changing a little bit next week. I need to touch base with Markus because he is getting back to the U.S. But you know that I was doing the updates on Monday and Friday. We might go back to our regularly scheduled program. We'll keep you posted. For those of you who have been watching and enjoy the videos, we appreciate the likes and the channel follows. If this is your first time, I know it can be a little overwhelming at times, so we'll post a video in the description, which will be a great place to get started if you're new. Now, let's jump to the charts here, and I actually need to share my screen real quick. I was getting ready, looking at things this morning, and I forgot to do that. There we go. There's my chart. And wow, what a week. So I'm showing the S&P 500, and this week kicked off on Monday, a real quiet Monday, but no surprise. We talked about it. This is arguably the most important or busiest week of the year, definitely for the quarter. Really, it was all about earnings. It was about the Fed, and it was about GDP. So on Monday, we just basically went nowhere. And then on Tuesday, we dropped a little bit with some earnings that were coming out, a little bit of a negative slant there, and closed right around the 50-day moving average. That's this blue line here in the S&P. And then on Wednesday, we opened higher. That was when we had the Fed statement and the Fed press conference. And we had a real strong finish on Wednesday. And then Thursday, we had GDP data, which was actually negative. But on Thursday, we had a nice rally. So we finished higher 1.2% in the S&P. The Dow finished higher by 1%, really the same type of movement for the week. And then the NASDAQ up 1.1%. Same situation, a quiet Monday, a down day on Tuesday, and then strong rallies on Wednesday and Thursday. So what the heck's going on here? Well, before we get too carried away, it's actually been a really strong week. It does look like we're going to finish higher with back-to-back weeks. When I looked at the S&P, it looks like that's going to be the first time since March. So it's been months since we've had back-to-back winning weeks. And you look at last year, and that was just normal for us to have back-to-back wins. So if you haven't been paying attention to the markets at all, and this is your first time looking at a chart this year, it's been a rough year, but a strong week. And it looks like we're going to finish the month really strong as well. I'm just going to go to a monthly chart here. And you see after a couple of rough months, this would be the best month of the year, unless there's something really strange that happens today. The S&P up 7.6% for the month. The Dow up 5.7% for the month. And the NASDAQ up 10% for the month. So a real big month. We're not back at the highs that we started the year at, but a real nice month overall. Now, let's get back to what's moving the markets here and what traders are focused on. And as we mentioned on Monday, it was a busy week for the markets. We had tech earnings, the Fed, and advanced GDP. Starting with the Fed raised rates by 75 basis points. Now, this was expected, but it's a huge rate hike. right? Fed Chair Jerome Powell admitted that these hikes are unusually high. And with this week's hike, the Fed now has interest rates at levels that are expected to be neutral in the long run. So it's kind of interesting because although we've had these big hikes and there's been this concern over just how much the Fed will raise rates, that 2.5% range is what the Fed considers to be a neutral level. So we're not even excessively high at this point. We're just neutral at these levels. Let's go ahead and let's jump over to the Fed funds uh, futures and the probability here. And here we see that the next meeting is going to be September 21st. So we actually have a long time between this meeting this week and the next meeting going 2 months out. So that will be in September. After that, you have a meeting in November, and then you have a meeting in December. And right now, we look at the current target rate is 225, 250, and traders are pricing in a 50 basis point hike for that next meeting. So it looks like traders are expecting things to slow down. There is a 30% chance right now that there will be a 75 basis point hike. And, we're still a decent ways away. There's a lot of data that actually is going to be digested and come out between now and the September meeting. But unless there's emergency meeting, which is unlikely unless something really, really strange happens, right now it looks like traders are betting that the Fed will slow things down. And if we look at the probabilities, this chart says the same. The September meeting right now pricing in 50 basis point hike. And then the idea is that in November, traders are expecting the Fed to raise rates by just a quarter point, another quarter point at the December meeting. And then it looks like traders are betting that things will slow down or stop and even come back a little bit in 2023. So interesting just how we've gone from, hey, this inflation thing is transitory, to shoot, this is awful, we're going to have huge rates, to now traders are at a point where slowing rate hikes and also expecting things to calm down for next year, at least based on data that we have now. Of course, anything can change, but based on the information we have now, it does look like things will be slowing. And also that's what the Fed has essentially said as well. Now, tackling a recession, the Fed says that we are not in a recession. This is where 2 quarters of negative growth based on GDP is a rule of thumb to identify a recession. But in order to declare a recession, an official recession gets declared by the National Bureau of Economic Research, which considers a number of factors. And the big case for not officially being in a recession right now is the strong jobs market. So although we had 2 negative quarters of GDP, so 6 months of a slowdown there, we're not officially in a recession yet because that has not been declared. And the argument for not being in a recession is a strong jobs market. Typically, you have a weakening jobs market and slowing growth to officially be in a recession. Now, the Fed actually wants the economy to slow in order to combat inflation. So that was actually a good sign to have that negative number. That was a good thing. And based on the rally that took place on Wednesday after the Fed statement and also on Thursday, you could argue that traders are thinking that the Fed's doing a decent job at this point. Maybe missed things early on, but they seem to agree with the Fed's decision, not overdoing it, and also forward-looking, thinking that they will be slower with those hikes, which would not have as much of an impact on the economy, even though it's slowing. They're not going to. You talk about this soft landing, right? And the whole idea is, are you going to bring the economy to a screeching halt to get inflation under control, or are we going to be able to manage this easier? And will it not have as big of an impact on the overall economy? Right now, it looks like traders are leaning more towards that compared to what we saw the last Fed statement, where we had this horrible CPI reading and then we were making lows for the year, right? So a big change, big change. Let's see here. So uh, earnings, earnings. So recently we've had some mixed numbers, and if we take a look at just a few of the bigger companies that reported, there was Walmart on Monday. A Walmart getting hammered, and you see here, let me go back, I am on a daily chart. So down 7%, huge drop for Walmart, and clawing its way back the last two trading sessions with the overall market. So getting back above its 50-day moving average. But a big miss, Walmart reporting earnings that were worse than expected. But the bigger issue is that the retailer cut its outlook for the quarter and for the full year, saying that discretionary spending had shifted from clothing and electronics to necessities because of inflation. And then there were concerns that maybe this is going to carry over into other companies. So that's why the markets were down on Tuesday. This was before the Fed. We also had Microsoft reporting after the bell on Tuesday, so a biggie there. Initially, actually, I think it was before the bell. Opening slightly higher, dropping down 2.7%, but coming right back with the data that we had this week. And then Meta, another biggie this week, formerly known as Facebook, reporting earnings and falling. So Meta reporting after the bell on Wednesday, and they reported their first year-to-year revenue dip. So some concerns there. Meta trading right around support. Looks like down another percent pre-market as well. And then yesterday after the bell, some big earnings. Let's first look at Roku. Roku getting hammered, down 23 point. Let's clean up this, give us a little more of a perspective here. Gosh, Roku, just nasty looking chart. Look at that. Coming right back down to pandemic lows back in March of 2020. Down, trading around $65 a share, down 23%. So Roku, nasty move lower. How, and to echo that move lower and to see something also that wasn't too hot. Intel reported after the bell, slashed its guidance, reported worse than expected earnings. Earnings came in at 29 cents versus 70 cents a share that was expected. Revenue was also lower. They said that they're preparing for a recession and that they expect macro, or quote from the CEO, we expect macroeconomic conditions to continue to soften with the potential for a recessionary scenario to materialize. There's also risk for continued COVID-related impacts on demand and the supply chain to continue throughout the year. So you'd think that today would be a pretty rough start if you just looked at Intel and Roku. Intel at $35 a share. Let's go back here. Last time it was trading at these levels, 2017, just completely wiping out. Look at this strong support here around pandemic lows, around $45 a share. Nowhere near that now, getting hit 11% after the bell. And what does this mean for the overall market? Well, thankfully, you have Apple saying, hey, we're doing okay. Right? So Apple, one of the biggest US companies, here we go. Look at this. Apple's up 2.5%, positive earnings. Apple looking strong here. So with Apple, they reported better than expected sales and profit. Even though the company reported slower growth compared to the previous year, they saw double-digit growth for their for customers new to the iPhone. They did not report guidance for the quarter. Apple CEO said, in terms of an outlook in the aggregate, we expect revenue to accelerate in the September quarter despite seeing some pockets of softness. I think that's the perfect nothing statement I've ever heard. I don't even know how he got away with that one, but it's so good and so bad at the same time. I had to quote him. In terms of an outlook in the aggregate, we expect revenue to accelerate in the September quarter despite seeing some pockets of softness. It's kind of like saying, well, today it's guaranteed that the markets will go up, down, or sideways, and I guarantee it. Right, so not really foreshadowing what's to come, but sounds like maybe slightly positive. I guess it depends how you want to spin it, how you take that. But either way, traders liking Apple's earnings up 2.5%. Another biggie after the bell. Let's look at Amazon, and Amazon just a huge move, 10% after the bell here. Let's look at this. We're trading pre-market around 134. That puts us back at levels that we saw in April. So we had this nice range here at the beginning of the year, broke through that on earnings, and then we created a new range around 100, between 100, maybe 125-ish. Now breaking to the upside. Looks like we're filling that gap back here in May. Amazon, they reported better than expected numbers, also had optimistic guidance, a loss of 20 cents a share, but revenue was better than expected. But the big news was that Amazon expects to post third quarter revenue that would represent 13 to 17% growth, which was much better than expected. So here we have Walmart saying, hey, things are bad, things are slowing down. And we have Amazon saying, hey, this is going to be a good quarter. Amazon CEO said, despite continued inflationary pressures in fuel, energy, and transportation costs, we're making progress on the more controllable costs we referenced last quarter, particularly the productivity of our fulfillment network. So not too bad for Amazon, up 10%. Huge move there. A few other movers this morning. Let's look at ExxonMobil. We had ExxonMobil and Chevron reporting before the bell. They reported better than expected numbers for the quarter, and they reported record profits. So ExxonMobil trading around $95 a share, pre-market up 2.5%. We could also look at Chevron. Chevron also on the move. Chevron up almost 4%, trading around 156. So another good quarter for energy stocks. Crude oil, as we look at today's move, up 4%. So crude oil getting back to that 100 level. We'll see if we stay in a new range or if we break to the upside here. But for really the entire week, we were trading below $100 a barrel. And right now, pre-market, we are back above. Well, crude oil futures are trading. So you can't even say it's pre-market for crude oil futures. Pre-market for the stock market, right above $100 a barrel. Now, I want to take a look at some open trades. And this is where I am still holding AMD. AMD has had a nice run this week. So trading at highs that we have not seen going back to mid-June. So I'm liking this, still holding this one. I'll see if I can sell calls today, maybe next week. We do have earnings coming out on August 2nd here for AMD. Markus is in ARKF, and here ARKF is moving slightly higher, down a little bit pre-market, but still trading in this range. So the range is holding up, which is a positive. We both have a position in LVS. LVS, a real nice run last week. Here, just kind of going sideways, going flat. We are still in this, and we need to get a little bit higher up in this range for us to be selling calls, but I like that we're holding at these levels. NVIDIA is basically Markus's AMD trade. So he has NVIDIA. I traded AMD, and AMD down just a little bit pre-market, but trading back at these highs, which we will take. Hopefully looking to sell calls. If not today, next week. With a down day, we prefer to sell calls on an up day, so probably be next week. But getting into that call selling zone, which is great. We both have a position in Ride that we're just holding on to right now. I have a small position. I closed half of it last year when we had a big rally, but I'm still holding a small position here. Then Markus has TPR. TPR trading around 34. No trades pre-market, but it does look like we're 34.05 bid, 34.20 offer. So if these show any validity in our still actively traded, looks like we're going to be up a little bit on TPR. I am not in this one. Markus is, but nice to be at this upper level. Probably need to get to 35, 36 to be selling calls again. But everything this week helping out open positions. I did close my Marriott trade. So on Monday, I mentioned that last week I sold calls. I decided I didn't want to roll those calls. And then on Monday, I decided to close the trade. So made money on the premium collected with the put and calls that I sold, but I closed it at my assignment price. And that was really because there was too much uncertainty for the week. With a new range here, uh, I got into this. I sold Marriott puts at 152.50. I believe it was on this day, and we broke through that level real quickly, and we found some support around 135, which was fine. Down 10% on the position, and then we had a rally back towards these levels. So I decided that going into such a busy week, where I mean, really, it was a toss up to either see a big rally like we had or a sell off. I didn't want to be holding this. I would rather have a free open position looking for new opportunities, especially because earnings are going to be released next week. So I'm no longer in Marriott, made some money on the premium, but decided to close that on Monday. So I'm looking to add some positions. Open positions have been nice this week, but I definitely have a few or current positions that have open have been nice. I do have some open buying power that I'm looking to employ, especially now that we have this week's news out of the way, and we'll see if there's anything popping up today with futures pointing to a positive start. I don't expect any put selling unless there's a sell off after we open up. Most likely we'll be active again next week. So, well, hey, I know we went a little bit longer, and with these Friday wrap ups, I mean that's what I decided to do, and we will keep everybody posted on what our schedule is for August. I need to have a conversation with Markus and figure it out because I don't even know myself. But we'll keep everybody posted. I enjoy doing these. I hope that you appreciate the commentary, and if you do, give it a like. And we'll see you back here next week. So have a great weekend. Until Monday, happy trading, everybody.